Okay, hi. So once again, you are welcome. And today's session is the intermediate session. Intermediate session. Okay. In the previous session, which was the beginner session, what we did was I introduced you to what financial market is. Forex market and all of that. But the key takeaway points was before you can become a successful trader, you need to understand three key topics: strategy or analysis, risk management, and psychology. Okay, so today we are going to look at all of that: analysis, risk management, and then psychology. And then maybe in our next session, we'll look at a trading plan. Okay, all right. So let's delve into it. Let me share my screen. Okay, okay, I'm coming. Okay. So it says that market analysis, it involves the market analysis involves the examination and interpretation of market data to make informed decision. So he said it involves examination and interpretation of market data to make informed decision. Okay, to make informed decision. The data is basically the information that you are going to use. Okay, in doing your analysis and all of that. But you need to examine them very well to ensure that whatever you are going to do stands the chance of being profitable. We're not going to end up in huge losses. Okay. Now the analysis, we have technical analysis, fundamental analysis, sentimental analysis. With technical analysis is mainly done in the trading platforms like MT4 or MT5 or other trading platforms. Fundamental and then technical analysis has got to do with pattern recognition and price movements. We'll look at that shortly. Then we have economic fundamental analysis. It has got to do with economic data releases or reports like interest rates, unemployment rates, and all of that. So if let's say unemployment rate yesterday was 10, today is 15, it tells you that a lot of people are not working, they are not getting money, you're unable to buy. So the economy is weak. In that case, you sell that currency. Okay. And the third one is sentimental analysis. Well, sentimental analysis is around how people feel about how they believe the market is going to behave, in the future. We are going to look at all of that now. Now let's delve into it. Um, okay. Okay, so what I'm sharing with you right now is a trading platform called the MT4, and for educational purposes, that's what we are going to, be using for educational purposes. Okay, the trading platform is your workstation. You need to know how to navigate. Okay, find your way around it. But I am going to show you how to analyze the data there. Maybe I'll share a video with you later on how to use the trading platform, okay, or to how to navigate your way around it. But there's a lot of videos online that you can have a look at. It's going to help you know how to navigate your way around it. But well, let me take you through that process as well. Okay, so how to navigate around the trading platform. Okay, first you have this screen. When you download that, you download the MT4. When you create an account with the broker will send you MT4 logins. Okay, you can download the MT4 trading platform in your dashboard with the broker. Okay, when you download it, you just have to install it and then everything will appear like this. Or if you're unable to do that, look at the movement of the mouse. You go to file, okay, then you scroll down, you select login to trade accounts like this. You see login, which the broker has shared with you, password, the one you used in creating your account, and then your server, different types of servers. What the broker shares with you is what you do. Then it takes save account information so that you don't keep logging in case you are logged out. Okay, like that. Now, look at the movement of the mouse. This is where we call the market window, market watch. Okay, this is where you see all market instruments. You scroll down, you see a lot of them. Bitcoin, oil, Google, Apple, so stocks, currencies, everything is there. Okay. Then what we have here is what we call the charts. Okay, where I have the mouse is what we call the chart. When you download the MT4 fresh, you see, a lot of confusing things. Like let me select the default. Maybe this. You see things like this. It's complex. Okay, so what you would want to do is select a default or set up a template. Okay, so what do? You right click on it like this. Then you come down to properties like this. Then you bring the mouse here. You select boo. When you hear boo, long, buy is the same thing. When you buy in the market, you're expecting the market to up or to go up. Okay, so we are going to change the color of that so that when the market is going up, we can be able to recognize. So boo, we have black color there. You select that, you delete, and then you type in green. Okay, and then we have bear is white now. You tap on that, you delete, and you type in red like this. You select OK. Okay. Now you see that the colors have changed, or the candlesticks have changed. Note that, okay, we'll get to that. The candlesticks have changed, but there are a lot of lines on there. We need to do away with all of that. You right click again, you see grid, select the grid. Everything moves out. We still have some things on there. You right click again, you select indicator lists like this. Then you tap on moving average, you see the delete activated, you delete. You tap on the other one, you delete, you select close. Okay. Now you still have some lines there. What do? With this, what's the name? With these lines, you need to do away with them. Select your come in the grid. You right click again, you come to common, chart shifts, auto scroll, period separator. You select period separator like this and select OK. You see that one too has left. Okay. So what do you have to do? You zoom in to see the charts well. Now, if you want to move the chart to right side or something, press the mouse and then drag it like this. Okay, you'll keep moving. Or you move the mouse up. You see where the mouse is, tap on it. You move to the right corner. Tap on it like this, it comes inside again. Okay. Now, there are different types of charts. We have line charts, bar charts, candlestick charts. We choose candlestick chart because that's widely used. Okay, but you can select line charts like this. You see, it has changed to line charts. You have bar charts, select, it has changed to bar charts, and then middle candlestick charts. That is it. Okay. Now we have different time frames that we trade. You can trade in 1 minute, daily, weekly, monthly, and all of that. What we have here is daily time frame. This is it. Okay, if you want to change it, you can look at the movement of the mouse. Select monthly time frame or weekly time frame or daily time frame, 30 minutes time frame, any time frame that you are okay with. Okay, that is how you go about it. Now, I'm going to explain this. Okay, so in the market watch, you select the pair, right click, select chart window. If it appears some way, somehow you redefine it, but you don't have to go back and come back and set it up again. So what do? You right click on that and save this template. You come to template, come to save template. Then you type maybe test or your name. Okay, save. Okay, then that's it. So anytime you open a chart, like let's say we open this chart like this, it's cutted. You right click on it, you come to templates, then you select tests. You see that everything is back there. Okay, you can choose to now change your time frame. Now, note this. Look at the movement of the mouse. You have this right side, you have price, like you see the prices moving there. The numbers you see are prices. Okay. Now look at the right where I'm moving the mouse again. We have AUDCHF. It stands for Australian dollar, Swiss francs. Okay, you want to trade them. What we have there is currency pair. We trade currencies in pair because you're exchanging one currency for another currency. So we trade currencies in pairs. The first side of the currency, the left is called base currency. The right is called quote currency. The left one is called base currency. The right side is called the quote currency. Now, to buy one base currency or to sell one quote currency, you should sell one base currency or buy one base currency. You need the current price of the quote currency or the current price, which is the quote currency. So in this case, to buy one Australian dollar, I need 0.57119 Swiss francs. Okay. Now, let's say you've made all your analysis. You place your trade. You right click, you select one click trading like this. Either buy or you sell. In between, you have what we call lot size. You see, I've typed in 0.01 there. When trading, 0.01 for standard accounts is equivalent to $1. 0.02 equivalent to $10. 1.00 is equivalent to $100. So you realize that the bigger your lot size, the more you expose yourself to risk. I hope you get me. Okay. You're just navigating the trading platform. Now, when you come here, you see your trade. In case you buy or you sell, you see order, you see the time. There's a time which you place your trade. The type is sell. Size is your lot size, 0.01. The symbol, which currency, price at which you bought it, stop loss, when do you want to leave the trade, take profits, when do you want to take your profit, current price. Swap is when you leave the market overnight, okay? What is added to it is what we call, or subtracted is what we call swap. And then here is profits, okay? The profits you have, accumulated or accrued so far. We have balance. Balance is how much, let's say, you deposit into your account, how much you have in there. Equity is your balance plus or minus your balance plus or minus your floating profit or floating loss. So you realize that the profit that I have here, which is 138, plus the balance is what is giving me the equity. Margin is how much the broker deducts or sets aside to enable you trade. Free margin is what you are left with to enable you trade. Margin level measures the strength or the health of your account. So if your margin level is dropping, it means your account is not healthy. Basically, this is what I can share with you for you to start trading using the trading platform. Okay, when you download it, set it up neat like this, and then start trading. Now, I said that to know how to trade, you need to know about strategies, analysis. Second. Okay. Sorry. Okay. You need to know about analysis. Okay. And analysis, you have technical, fundamental, and sentimental analysis. Technical, fundamental, sentimental. Technical is mainly done on a trading platform. It has got to do with pattern recognition and price movement. This is price movement. So we are going to look at pattern recognition. There are two main patterns. It's either the market is ranging or it's either the market is trending. Now, a ranging market is a market that keeps bouncing between a higher price and then a lower price. Okay. So let's just choose any currency pair. Okay. Tests. This is a 4-hour time frame for Canadian dollar against Japanese yen. Okay. Ranging markets, okay, like I said, keeps bouncing between a higher price and then a lower price. So what do you then do? It has to normally give you a V shape or inverted V shape or W or M shape. So first of all, when you want to trade in a ranging market, look at the chart, select a horizontal line, look at the movement of the mouse, select a horizontal line like this, put it on a higher price. Select the horizontal line again on the lower price. Okay. Now this is my reference. The price moved from here to here, lower to higher. And then I select another line, I draw from higher, and I'm expecting it to come to this point, the lower price. Now, when it gets to this lower price, I am then going to buy. Note that the highest price is called resistance. The lowest price is called support. And you can see an inverted V shape. It tells you that you are in a ranging market. The price keeps bouncing between lower price and then a higher price. So it moved from lower price to higher and then it's back to lower price. So then based on this previous data, what are you expecting in the future? Chances of moving to the higher price again. Note that everything we do in this life, or our projection, future projections that we are going to travel, we are going to get good jobs, we are going to sleep and wake up in the next day, all of these projections are based on previous, what's the name? Previous data. Okay, because you slept, you woke up. So you are believing that if you sleep again, there are high chances you are going to wake up again. The same thing applies here. You slept lower price, you woke up at higher price. You slept at lower price again, so there are high chances you are going to wake up again. So it moves. That's your direction. But because you don't know that if you wake up, you sleep, you are going to wake up again, you ensure that you have your stop loss somewhere just beneath or below where you want to buy. So that in case it doesn't go your way, hit your stop loss, you leave the market. It's business, it's always there, you always come. I hope you get it. So trending markets, technical analysis, trending markets, ranging markets. We are looking at trending markets now. Markets price keeps bouncing between higher price, lower price. Higher price is called resistance. You sell at resistance. Lower price is called support. You buy at support. Now, how do you approach the ranging markets? Is either you approach it using a price action approach or indicator approach. What we just did is a price action approach, where you just look at patterns, you select horizontal lines, objects like I did, draw higher, lower, you do all that you have to do. Now we are going to delete it, okay, and then look at how to use indicators. Now for educational purposes, we are going to use just one indicator. When you acquire the skills more, you can use more indicators or apply different indicators. What we are going to do is select indicators. So move the mouse to insert, come to indicators, then come to oscillators, then select oscillators, then select relative strength index. Okay. Now, the relative strength index has, look at the movement of the mouse, 70, okay, and then 30. 70 is the highest, let's say the highest band or price, lowest band or price 30. You sell at 70, you buy at 30. So when the blue lines get to 30, you buy. When it gets to 70, you sell. That's for indicators. Okay. But like I said, every trade comes with some level of risk. So you need to ensure that in case you don't come out the trade with profit, the losses shouldn't be too much to hurt you or to hurt your account so that you can't even come to the market again. Okay. All right. Now, the next one we are going to look at is the trending market. A trending market is a market that keeps moving in one direction. Okay. So, just want to, okay, let's use this currency pair. Okay. For a look of this, like I said, even the trading, ranging or trending, you are going to approach it using price action, or you are going to approach it using price action, or you are going to approach it using indicators. Let's see how to use indicators on a trending market. The indicator we are going to use here is moving average. So you come here to insert, then you come to indicators, then you come to trend, then you come to moving average. Select OK. You see we have a white line on the screen now. Okay. Now with moving average, like I said, with trending market, you're expecting the market to move in one trend. It's either it's going down or it's going up. If the market crosses the moving average up, you buy because you're expecting it to go up. If the moving average crosses the market down like this, you're expecting it to go down. So currently we have the moving average cross the price cross moving average like this, we are expecting it to move up. Like I said, with trade, any other trade, there's just chances that it will go. Okay, like I said, if you sleep, you believe that there are chances that you wake up. Or what if you don't wake up? Okay, so that is it. So even if it crosses, you ensure you have your stop loss somewhere so that in case it doesn't go your way, it doesn't hurt you that much. Okay. Somebody will ask, how do you set the stop loss? Okay, so before you even place the trade, let's say you want to place this trade, you come to market watch, select new order. Then you put your stop loss here, type it in here, the price, your take profit, type it in there. Then you place your trade. There are a lot of videos on YouTube to serve as a guide too. So that is it for trending markets. We're using indicators. So we are going to look at trending markets using price action. I said price action. You just use objects, okay, your lines, and then identify patterns. So I select this line. I choose this point as my reference. I draw it up because I believe it's going up. All of us can see too. So from your reference, the trend line should move up and touch at least one higher low. There's a reference. There's the first higher low. You draw a line to touch it, then you draw up. So what do? Is either the trend continues or the trend reverses. Select a diagonal line. How, if the trend should reverse, you expect the price to come down like this. When it gets to this trend line and it breaks down, you sell. When it gets to this trend line and it doesn't break and it bounces back again like this, you buy. It bounces on the trend line, then you buy. Okay. So this is how to also approach a trending market using price action. Okay. The next one we are going to look at here is the coming. Okay. It's fundamental analysis. Okay. Fundamental analysis. Now, fundamental analysis has got to do with economic data releases. We are going to look at one. Okay. So what do you do? What do? You come, you visit say, the BD Swiss website. Okay. Like this. I hope you can see my screen. Then you come to, you see home, trading, research, select research. Then come to economic calendar, research and analysis. You come to tools. You come to economic calendar, select economic calendar like this. Okay. Now, when you select the economic calendar, it's going to tell you economic data releases like unemployment rate, all of that. Okay. You look at the dates, with dates today, 28, you select it. And the time is 16, that's GMT, 16:27. GMT here for me is okay. Some news affect the market, some news also don't affect the market. So I want to select news that affect the market. So I select high. Okay. Then which currency or which countries do I want to trade? Today, maybe I want to see something from USA like this. And I come up and see if there's news. Yes, there's news here. It says GDP growth rate, okay, for Q4 or the fourth quarter. I tap on it like this to read the details. So you see on the expenditure side, personal expenditure, blah, 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 blah. So you look at all this data and then based on this, you can make a trading decision that, oh, okay, looking at this, then there are high chances that the market is going to appreciate in value or is going to depreciate in value. I hope you get it. Then that is it for fundamental analysis. Okay. All right. Okay. And then back to the presentation, you have sentimental analysis. So you can download the BD Swiss app from any of the shops. Okay. And from there, you select any of the pair, you see the sentimental analysis where it says that maybe 100% of people are buying Euro USD or something else. Or you can Google maybe AUD USD sentimental analysis. You have a lot of information on there. Okay. Thank you. So we are now going to move to the next slide. That is forex trading risk management. So risk management in forex trading is a set of strategies and techniques employed by traders to mitigate the potential losses, and associated with their trades. So, like any other thing, comes with risk. Okay. If you sleep and you don't close your door, you think there are high chances something is going to happen to you in your room. Okay. So you ensure that you close your door, and that is part of risk management. Okay. So in trading, risk management, the key things I would like you to pay attention to is your lot size. Lot size is part of your money you are using to initiate the transaction. So if you have $100 and you are using $50 to initiate the transaction, if the trade doesn't go your way, you are going to lose more as compared to somebody who also has $100 but using $1 to initiate the transaction. I hope you get it. Stop loss, take profit. Stop loss is how much you are ready to lose in case the trade doesn't go your way. Immediately you enter the trade, you are going to exit. It's either you exit with profit or you exit with a loss. If you're exiting with a profit, you take the take profit order. That's all. When I get $10, I'm leaving. When I get $20, I'm leaving. A loss, when I get $2, I'm leaving. When I get to $5, I'm leaving. You need to pay attention to these. Okay. And then we have forex trading psychology. So psychology basically refers to the mental and emotional aspects that influence traders' behavior and decision making in the foreign exchange market. Okay, it refers to the mental emotional aspect. So emotional. Okay, so basic emotions of trading cycle, there are a lot, but we have something like greed. Greed is most of the time attached to profit taking. You make 10, you want to make 20. It's good, but you already had a plan that when you make 10, you are going out. So why? Hope, loss. It's linked to loss. When you are losing, you lose 5. Instead of you to take the 5 and leave, you said, oh, you are hoping the market is going to reverse. Fear. Let's say you lose 2 or 3 trades in a row. The fourth one, you feel you are going to lose again. But remember that each trade is unique. Um, Revenge is, let's say you made a loss and you want to recover all your losses. You increase your lot size, you expose yourself to a lot of risk. Then euphoria, you make more profits and you feel that, oh, the next trade is going to be profitable too. So you increase your lot size. This is a dangerous act. FOMO is fear of missing out. Fear of missing out is people who are always in the market believing or feeling that there's something happening in the market that they are not aware of. Please stick to a trading plan, which we are going to look at in the next session. So thank you very much. What you have to do in this session is very, very important. Try to practice whatever that I've shown you or shared with you. Practice, make mistakes. When you make mistakes, you can ask questions, and I'm ready to help you through that. Thank you.